Have you heard that there are tax savings from setting up a limited liability company as a real estate investor? Well, in this video, I'm going to be breaking that down for you and show you where there is and where there isn't when it comes to using LLCs for real estate. All right, let's get started. Okay, so this comes up quite a bit. When I'm talking to potential real estate investors or current real estate investors, they always come up to me and say, hey, I need to set up a limited liability company. And they don't say oftentimes asset protection, although some do. Many times it's about the tax savings that comes from setting up the LLC. Well, the fact of the matter is that is just not the case. That in setting up a limited liability company, there is not a lot of tax savings for the average investor. Now, what do I mean by that? Let me show you. So when it comes to setting up your limited liability company, if you're a passive investor, that means you're holding real estate long term. Okay, so holding real estate long terms means short-term rentals, long-term rentals, right? Anything commercial that you're going to hold for more than a year that you're going to rent out. When you create your limited liability company, you want to make sure that you're preserving all of the tax benefits that comes from owning that real estate, which means you don't want to screw around with the tax status of this LLC that could impact the benefits of being a real estate investor. Now, what do I mean by that? Depreciation. So if you have a piece of property in a limited liability company, you want to make sure that all of the depreciation that flows from this flows down to you and hits your 1040. Because if you're a real estate professional or you're using short-term rentals and you're materially participating, both of which concepts, if you're not familiar with that, look in the show notes. I have 2 videos I want you to go and watch that discuss the benefits of being a short-term rental investor and what it can do for you from a tax standpoint or a real estate professional. Now, those are things that we want to preserve if at all possible. So by having your company set up the right way from a tax standpoint, you're going to make sure that you're capitalizing on all of your real estate tax deductions. And you can use them potentially to offset your other W-2 income or income on your 1040. So that means when you set up your LLC, there are no tax benefits from setting up the LLC because you're going to create this company so that it's treated from a federal tax standpoint the same as if you owned the property in your own name. And so how does that occur? Well, when you create this LLC, either it's going to be disregarded for federal tax purposes or it'll flow through a partnership. Okay, for federal tax purposes. And both of those mean that it's going to flow down to your 1040. It's going to hit your return the same way it essentially would if you own the property in your own name. So you get to keep all those same real estate benefits that makes real estate such an attractive tax shelter for investors. Okay, so what I just told you then is that by setting up the LLC, it does not provide any tax benefits for the long-term real estate investor. Now, there's another side to this coin, which is the active investor, where it can provide benefits. And before I share with you that, then you're probably wondering, why do people set up LLCs then for real estate investing? It's simple, asset protection. Okay, this is why we do it. I do not want to lose my assets or all my investments in the event of a lawsuit. I don't want to be sued and then lose my real estate. In fact, I don't want my real estate to infect the other real estate, so we want to set up strategies to make sure we're protecting ourselves. And if you watched any of my videos, I cover this quite exhaustively on my channel here. Okay, so let's move to the active side. And this is where I'm going to show you where real estate, an LLC can actually help you for your real estate investing and provide some tax benefits. So what does that look like? Okay, so this is what I call active investing. Okay, so active investing really breaks down as follows. If you're wholesaling property or you're flipping real estate. So those are the 2 main categories of investing that we're referring to here, active investing. Now, what's a particular concern for us with the active investing side is that the income generated from these activities is considered active. And active income is subject to employment taxes. Okay, so that's, you know what that is, 15.3% on your income. Okay, so you have employment taxes, plus you have ordinary income taxes from this investing. And the other problem you run into if you're flipping is that you could possibly be tagged as a dealer, which can then cause a host of other issues when it comes to your investing side. the long-term side of your investing. So because of these issues right here, if you're an active investor, then what we want to do is set up our LLC and make a specific tax election to try to reduce the negative impact that this type of income or this type of activity has on our tax return. So if you fit into this category, then the business in which that you're going to set up, I'm going to set up my LLC right here. Now it will have an impact on how it's felt or how I receive this money from a tax standpoint, because I'm going to elect to treat this as either an S or a C corporation for federal tax purposes. Now, why am I doing that? Because I want to change the nature of the income when it flows down to me. You see, as the investor that I was talking about, we just want to keep that money coming through. We want to keep it exactly the same. We don't want to mess with how it hits our 1040 because we're angling for certain tax benefits from owning real estate. With this side of the coin, we're not angling for that, okay? We definitely want to stop how it hits our return. Get in front of that before it flows down there, because if we don't, then we're just going to be overpaying in taxes on an annual basis on our active income. So with the S or C, you have the ability now to control how that income hits you. So this income flows into this business that I've created, the LLC. And then what I'm going to do is I'm going to be taking money out as a salary. So that's going to be my active income component, which would be subject to my employment taxes, the 15.3% that we talked about. But then I'm going to be taking money out of the bottom as either a dividend, if it's a C corporation, or a distribution if it's a S corporation. And this right here is not subject to employment taxes. Or quite possibly I'm going to leave profits in here if it's a C corp, because they're going to be taxed at a flat 21%. So you see, when you're coming on the active side, an LLC can definitely help you from a tax standpoint, but it's the only time in which it's going to provide any benefit is if you're using it for active income purposes. Now, in order to make the proper determination on whether or not your company should be an S corporation or a C corporation for those types of active activities, I'd encourage you to take advantage of our offer here at Anderson for a free strategy session. There is a link in the show notes. You go to that link, you can then register for a free 45-minute strategy session where you can talk to one of my representatives here at Anderson. They're going to walk you through the right type of structure to set up for your particular type of investing. Not only do we talk about the right type of business entity, how it should be taxed, we'll also discuss where you should set up that company, because you may be surprised to find that in certain situations, looking at an out-of-state entity other than the state in which you live in, such as Wyoming or Delaware, makes a lot of sense for your type of investing. So I'd highly encourage you to do that. Take advantage of it. It's completely free. And while you're on the site, if you like my video, be sure to smash the like button. Take care.